Good afternoon. It is Wednesday, February 21st, and the Federal Open Management Committee, FOMC, Open Market Committee, had their meeting last with Chair Yellen, and I'm sorry to see her go. I think she did a fantastic job getting us out of the financial crisis. Her stewardship really saved the world, I think. She did a fabulous job. They the last meeting they revised their upward economic projections from their previous meeting, thinking that inflation is going to continue due to the economic growth that they expect with the president's tax cut legislation and the other positive market economy going forward. So they indicate that they're going to slowly raise rates. And so the markets, after digesting this, initially took off, never made it to the target, turned around, sort of did this hair turn where we thought it was going to go back up, but it flipped over. And on that flip, it just crashed. And all the markets looked the same. The E-mini, same market action. We'll take a look at that real quick. Same thing. Moved up, rolled over. So the markets are in tandem on this move. And what I think is going to happen going forward is we're just going to get a resumption of trade like it was before all of the market manipulation. Um, so it's going to be up and down trading and all hands on deck. So get a trading strategy, get a plan in place, recognize when you want to be in the market, pick these times to come in and out and take trades during that time frame on your smaller time frame charts in the direction of the trend. Let me show you a smaller time frame chart. I had it on the wrong instrument. Just give me 1 second while I flip it over to the ES, and I will give you a live demonstration of what that looks like on taking trades in that direction during that time frame, and then when it rolls over, how to do it. All right, so here we go. Lots of lines. It may confuse you at first, but when the market is, let's see, from 8:45 until 1:45 going up, you want to be able to have a plan in place to trade that upward momentum, recognizing that you are going to get up and downs during that period. But you just have to have a methodology. I like taking trigger 4s and trigger 3s. So those are my signals. And so I get in at that location with a minimal risk identified, and a maximum reward. And that is after you've identified that the condition exists, right? So if you trade with the direction of the trend, you won't take the downside trades. You'll wait for the market to flip back up and then just come back in and again resume your methodology like a spider. Oops, Let's get this minimal risk, maximum reward. Okay, now the market turned over after that announcement. So, and again, going into the announcement, and then it rolled over. We're on the downside now. So we're coming back down. So we don't want to take, there's a trigger 4 just fired off. So know which direction you're trading. You don't have to trade up and down. You can sit out of the market, sit on your hands. I like trading with my market analyzer and weekly, daily, 60-15, going in that direction. I'm testing strategies, so I'm sort of all over the place trying to get my levels set, but I pretty much know what I'm looking for, and it starts with the daily, really. I was trying to explain this to someone else. You know, you want to wait for the price to do a specific behavior to know your optimal trade time. So right now we are not outside the channel. We're inside the channel, so that means up and down trading, not really an edge at all. In fact, it's right in the middle, flat of this channel. No edge at all. It could still go up, but I think the price has rolled over, and we're going to go back and explore the downside of this, and still we're going to be inside an up channel, so it's not really the optimum time for trailing trend trading. It's the time to be up and down trading and just using your 15-minute range. So when the 15-minute goes below the channel, like right here, that's when you want to get your strategy out and try to come in and pick some of these up. Optimum trade locations, and take them back down to the dots. Trail those dots, or that's your trajectory. That's your profit target. So, you know, pick the times carefully. If it's inside the band, it's going to give you inside trading. It's probably going to respond on that band, come back inside of it. You need a clean break above or below and hope that it runs. But hopefully, again, you're going to be matching that upper time frame. So the best time to do this is to find a market that is up or down on that band, and then trade those 15-minute ranges with your lower time frame entry system, whatever that is. So picking your time to trade is 100% of the battle. A lot of the times we'll come into the trade room and the markets won't be set up. I can't find anything that's set up, you know, that's tradable. And so I'll say, you know, it's going to be red, white day. It's going to be back and forth. We're inside of a range, inside of a flat middle of a range, and there's not much we can do. And that's just the way it is. I mean, you know, you can try to widen your basket of instruments that you trade, but, you know, we have our favorites. You know, we like the Russell, the Dow, the NASDAQ, the crude, you know, the instruments that tend to run and give you the biggest ranges to trade on. So, you know, we're always hunting, for opportunities to trade that. So you can take it down to a smaller time frame chart, look for those outside opportunities, and when you see it running outside the channel, I mean, because your time is limited, that's when you just want to be jumping all over these on that lower time frame entry. So I hope you're starting to get it. And that's not to say that you're not going to get great trade opportunities. This was a coast to coast. Look at that. It was outside the channel and went all the way to the bottom of it in like 10 minutes. That doesn't happen every day, you know. In fact, it happens very rarely. So this means that price is changing direction in the big index. So in the S&P 500. So this is a change of direction. Do you see that wick? The market is going to be going down from here, exploring this bottom part. That's not to say it won't ever get back up there. It will, trust me. But we're going to be coming back down to the downside for a while. But try to find a market that is going to be trading, setting up. Let's look. Let me see what was trading to the downside for so long. Beans. We'll look at beans. Oh my God, look at that. See what I mean? Very hard to trade that. Nat gas. Let me show you that. Gas. This is a good contract to trade. See how it went down the band, outside the band? That's your opportunity for your trend trading. Inside the band, up and down. Inside the band, up and down. Here it is again in December. All of December started breaking outside the bands. And again, right, just first part of February. Right now we're coming back inside the band, moving up. But learn to spot your timing of your trades. Keep your world small. The bonds here right now, down, 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 down. So that yield, the reason the stock sold off was because this yield got to the highest, almost 3, right? What was it? I forget. I need to go look at that 10-year. But that 10-year spiked, and that's why the price of the bonds go down. They run opposite of that correlation. The higher the yield, the lower the price. And so that's why the stocks tanked, is because the bonds are tanking, or the yield spiked. So, but right now it's a good time to be shorting the bonds, obviously. And so that is it. That's pretty much it in a nutshell. Um, and what else do I have for you? The Russell. This is a fun instrument to trade. Again, it's going to be the same. We're all going to be inside this huge value area. I mean, that's just ginormous, this value area. So it's going to eventually get down to the bottom of this area. So we know our target. It's like somebody said, I don't want to be a forecaster. I'm scratching my head on that. It's not that I'm forecasting. It's like you got to know your boundaries. You got to know the ranges and where price is likely to go, right? It's not so much forecasting, but kind of it is. Gold. It's testing the bottom of this channel right here. So if it breaks through, it'll keep running like that until it turns around. The time you want to be buying gold is when it's outside that channel. Do you see that? Are y'all starting to see? So we're at a precipice right here. See, it stopped on a dime here. So it might turn around, go back in the channel and go back up. But you really want to be a buyer when it goes outside the channel. That's when you want to start buying these futures contracts. And that was crude. Let's take a look at crude. Crude, see all of that outside the channel. And now we're back inside the channel. It got to the top of the channel and it turned around. So, all right. It's better. It's the best time to trade is outside the channel on the daily. Absolutely on the weekly if you can get it right there. Awesome, awesome time to trade. And here was your down times. We had some great trading in crude. Fantastic trades. And got right to the moving average and turned around. It looks like it's headed there. Not to forecast, but you got to look to see where it's going. That's funny. Um, all right, enough preaching at you. We're here to make money. The momentum, make sure you understand what price is doing once it gets to a level and either stops on a dime and turns back around and closes above the averages, and you see a divergence setting up like that. It doesn't mean that it's going to stop going, short. It just means it's going to pull back and consolidate, because that's what price does. It pulls back to the averages after an extended move like we had today. So try to find a market that is exceeding its range, to time it to trade. And if you're inside the middle of a range, just be aware of that, because you will get two-sided trading, and it's always best then to limit your trade to that 15-minute time frame and wait for them to break out, and then try to coast on some trades in that direction, however you do it. All right, that's all I have for you. Trading lesson is over. And we will see you in the trade room tomorrow. Thank you very much. Y'all have a good one.